May 8th, 2025. Uh, we had obviously a pretty sharp rally today and then sold back off towards the top of the trading range, the breakout point, the one high, towards the end of the day. Coming into the day, if you look at the Globex 15-minute chart, the whole move down to here and the move prior to it was an 8-bar bear micro channel. So on the Globex 15-minute chart, there was an 8-bar bear micro channel leading up to the 10, 11, 12 move. 4, 5, and 6, not a very good 3-bar micro channel. 1 and 2 probably needs a second leg. 4 is good enough. Maybe it gets a leg 3, but 8 and 9 is leg 3, so it's not really worth it to be selling down here near the moving average after 3 legs down. We'll probably do for a bounce. It was, again, like I said, an 8 or 9 bar micro channel on the 15-minute chart, so I did take 12, but I did not, it was probably a bit of a mistake. It was also against the current regime. And obviously, as I said, a 9-bar micro channel, so not really that good of a trade here. 14 is a surprise against me. It would make sense to exit. I just haven't studied that particularly yet, and I did get stopped out. We got 3 legs down, 1, pullback 2, pullback 3. And then we essentially have, I would view this as a 5-bar micro channel, 18, 19, 20, 21, 22. So a 5-bar micro channel, but specifically 20, 21, and 22. This is a really, really strong micro channel. 20 is a surprise, and 21 is really good follow through. We got more follow through on 22. So this is one of the higher probabilities. I gave it an 85% grading. It's one of the higher probability micro channels that there are out there. When that happens, I usually buy the close and I add my first scale in on the close as well. So instead of buying and looking to scale in, I bought heavier on the close, thinking that there was a higher chance of it going for 1R, or basically a measured move up. You know that there is, in general, on any given setup, a 19.5% chance. You can round to 20 for simplicity, but a 19.5% chance of the market immediately getting 1R of follow through before a pullback. But when you have something this strong, it could be a little bit higher. Maybe it's 30%, 40%, something like that happens. Probably not 40, but maybe 30. 23 is basically perfect follow through. I mean, you can't really ask for a better follow through bar than 33. So it would make sense for me to buy more on the close, or sorry, 23, not 33. It would make sense for me to buy more on the close of 23. I haven't studied that yet. I'm going to be getting to that. I have a lot of work to do, but it's good. I found an issue with the way I was tracking pullbacks on my losing trades. I should be tracking the pullback to the symmetrical second leg, and I was tracking the pullback all the way down to the loss. I'm sure that doesn't make any sense, but I have to redo a big chunk of it, which is going to take a lot of time, but it'll be better after. So this is basically perfect follow through. It's reasonable to buy more and still expect a symmetrical second leg up, which we do get. We also got a measured move to the tick all the way up. So we got a measured move up basically to the tick on, I meant to add 24 in there as well. From the 20 low to the 24 close, we basically got an exact measured move up within a tick. I measured earlier, it might have been to the tick or within a tick. Either way, the market was obviously paying attention to the initial spike. And oftentimes you do get a spike of a measured move up. Probably in this case, 80% chance with something that looks this strong. This is pretty rare. 29 and 30, just to pull back, or 25, 26, 27 is very likely to get some sort of third leg up. So I did buy the close of 27. I was looking for some sort of symmetrical second leg to start, but the problem was that the target ends up being very far, right? And the volatility decreases, so it's a little bit difficult. And you really don't want to see the market, it's okay if it's channeling up, but 43 is a problem. And then a 3-bar micro channel against me tells me I'm probably in a trading range. If I'm buying this close, I probably want, the channel is fine, but when it converts into a trading range, we're probably going to get back to the bar 30 low, since 30 is the bottom of the channel, and the bottom of the channel is going to be the bottom of the trading range. So I was expecting that after these 3, we would probably get back into this area. I did end up holding it, and I got out somewhere in here. I had bought and taken a scale in. Basically, my scale in ended up being the low tick of 30. And I got out for a small loss over here. As a side note, the only other trade I took today was I bought 58, scaled in, and got a symmetrical second leg. So I took a small loss today. Like I said, we get 3 legs up, 1, pullback 2, pullback 3. It's pretty interesting. 30 isn't exactly the bar you want to see if you're looking for momentum. You probably wanted to see this bar get bought up a lot more. Some traders will exit, 30 or 31 basically on a bounce, or close of 30, right? Let's say you exit on the close of 30, you take a small loss from some sort of buy the close. 31 and 32 are basically the perfect bars to get you back in. Most traders looking to exit should have a re-entry plan. And a simple one is if you get really strong consecutive bull bars after, you look to re-enter so traders can buy again, looking for another leg up. I did not take 39, but 39 does end up being a loser. You do not get a measured move up, and there was no symmetrical second leg. 44 makes sense. It's 3 legs up, late. So 39 is a very late leg, and this is leg 1 on 44. So I think it's okay to sell 44 and expect some sort of symmetrical second leg down. It's just very against the regime of the day. It's been a very large bullish day. So you're just betting on the trading range starting, which I think is a completely fine thing to do. There's nothing wrong with betting on the trading range starting here, but that's just, you have to keep in mind, you're not looking for a bear trend, you're looking for a trading range. 5-bar bear micro channel, 2-bar 47, a bull bar. It's a good close, but this is going to get a second leg down. This is leg 1. Why is this less likely to get another leg up and this is more likely? Because this is leg 3 and this is leg 1. So leg 1 is more likely to get leg 2 than leg 3 is to get leg 4. We have a second leg down, 48, 49, pullback on 50, and then 51, 52 is leg 3, and then a climactic leg 4 into support, the 30 low, which we went through but ended up retesting. And then kind of the same situation here as it was to here, except the whole day has been bullish. So, or the biggest move of the day is bull, and we're far above the open of the day. So I thought odds were it was a little bit of a better trade on 58, but it was on the moving average, which I have, again, I haven't measured everything with the moving average, but obviously it's going to be a little lower probability, but I did take it and scaled in and got my second leg on 61, and that got me out of the trade. 2 or 3 legs up to 64, 65, 66. You could sell this. This is a 4-bar micro channel on the 15-minute chart. See, this is going to get a second leg. So that's the one reason you have to be careful buying. And a lot of traders keep that in mind with their trades. That's how kind of have a lot of people use the higher time frame. You just keep in mind the fact that if you have a 4-bar micro channel for the bears there, it's going to get a second leg. So don't get caught up buying too much. We have another leg up, 69, 70, 71, but it looks like 3 legs up. And then obviously a breakout below the 55 low on 76 and follow through 77 back down to the bar 1 high. As far as the daily chart goes, I don't even know what open interest is. Not sure what that really is, but it doesn't really matter. As far as this goes, these 2 bars, May 5th and May 6th, might need some sort of second piece. So I wouldn't be surprised if we tested back into the 5,600 area. It's not really great to be buying up here, but it's not really all that excellent to be selling yet. So we're probably forming the top of the trading range. It could go a little bit higher, but we're probably in the area of the top of the trading range. The weekly chart, bulls are really hoping for a bull close on the weekly chart. It would be a 3-bar micro channel, but if the bulls can get consecutive closes above the moving average, that would be really important. So I think the open of the week is probably going to be important tomorrow, and it's not very far above. It's only 20 points above. So that's something to keep in mind.